Well, it's interesting. So we start out the year with a thud, and all the things that worked last year aren't working this year, except commodities, right? Commodities are still working. Small caps not working. Most stocks are going down, some mildly, some pretty tough, all those big names. So we talk about, will this year be a down year? Well, we start out down, and January is not over, but usually when the first month of the year is down, the likelihood of the market being down for the whole year is quite high. It's about 85-90%, Jack, right?
Yeah, Brian, that's correct. But I would like to point out that last year we pretty much finished on all-time highs. So for the market to have a correction, I think it's kind of expected. But yes, you're right. In the 85 to 95%.
Not a surprise. And if you think about it mathematically, part of the reason that would be, let's say we're down 11% on the NASDAQ. We have one more week left to see if there's a rally. But if we're down big in the NASDAQ and about half that in the broader markets, well, then we start out from a lower base, and then the markets would go up or down from there. And they would have to move up a lot just to get back to even. So just mathematically, it's really probably not a surprise that that's the case, that we could be down an 85-90% chance that we're down after the start we've had. So obviously that would be the first year the market's down in quite a number of years. I think the last year the market was down was something like 2015. So we really haven't seen much down. We had a big sell-off in 2020, but a reverse back up, and led by technology, the S&P was up 18. Maybe the average investor didn't do all that well in 2020, but the markets were back up after riding all the way down. So we haven't really seen a big down year in quite a while. So maybe this is a down year. It certainly is down now, at least from the beginning of the year. We also saw, you guys, some pretty heavy selling after the Biden press conference. President Biden has only had a couple press conferences since he's been in office, and yesterday was his first day, first year of his inauguration 1 year later. And so it was an unfortunate press conference, really, after about 2 hours of rambling and denying reality and, acting somewhat arrogant and kind of arguing with reporters. It kind of ended. Now, Trump also had the bombast that a lot of people didn't like either. So, Biden had that snarling old man look to him, and, you never admit when you're wrong syndrome. And Biden has that tendency kind of in mid-sentence to say, hey, look, everybody. And, it might be because he's making a point, or it might be because he lost his train of thought. But this is a perfect example. In recent podcasts, we talked about how people have less confidence in America. And the clips that we've put out, video clips where we mentioned that, got huge likes and huge response from the investing public that, people, are concerned about confidence in America. And maybe they're agreeing with the sentiment or just intrigued by it. But it does seem to be affecting the market when our president isn't really totally all there, totally rambling and not making sense and being a little bit angry at the press and everything else. So, of course, you expect conservatives to say that. But now we're seeing, some of their ardent supporters bail, talking to friends on the other side of the aisle, the Democratic side of the aisle. Some are outwardly speaking negative about Biden, and even some of the mainstream media that had always supported him a long time, they're groaning and grumbling and unhappy about it. So, and I would say for, just for balance, there's a large cohort of Republicans that didn't like Trump and didn't like his press conferences either. But it does seem to be that some of this stuff is affecting the economy. Now, a sharp contrast in the markets, a sharp contrast is this week, Prime Minister Boris Johnson in the UK announced that their January 26th restrictions will end and will not be met with another round of restrictions. They're lifting restrictions on mandates and masks and everything else. Spain, Switzerland, Nordic countries are following suit. So we have here Biden announcing he's sending 100 million masks to everyone. And there's new mandates coming on. We're hearing about a trucker mandate coming on now. And the rest of the world's going the other way. There is some polling show that some people like this, but the majority of polling shows that people don't like it. So we're not sure why this is all happening. But clearly the rest of the world is now leading our way out of this pandemic And, it's obviously not a positive for America. So heavy selling pressure has been taking place. And partially, I think it also has to do with the confidence of what people think in the economy, and the president and the leadership. So some of that selling pressure led to some extremely big moves. I think, Chris, you saw some of those big tech stocks got whacked, and in the old vernacular, they take them out back behind the shed and shoot them between the eyes. That's kind of what they did, didn't they?
Well, yeah, I think, there was headlined by Netflix and Peloton. And I think, you guys talked about this a little bit earlier. After 2020, we saw a huge resurgence, and mostly tech led the way in 2020 out of the pandemic, if you will. And Peloton was a darling because, people couldn't go to gyms. People didn't, want to wear masks in gyms. So everyone wanted to get these extremely expensive bikes. And, it was thriving for a period of time. Well, the documents were supposedly leaked that they had stopped production and the bikes, and that sales were starting to drift off now that, for the most part, things have certainly at least come back. If you can go to a gym now, there obviously are the restrictions, and depending on where you live. But for the most part, it's not what it was back in, the dark days of 2020. And the stock got whacked 25%. It bounced back a little bit today. And then Netflix, they yesterday after the close reported their forecast for subscriber growth for Q1. They forecasted 2.5 million new subscribers, which was less than half of what the analyst expectation was of 5.9 million. So a huge drop off in subscriber growth there for Netflix. So, I think it shows, and it speaks to what you talked about a little bit, Jack, that, I think you had these companies that kept running and running and running. And when you have a company that's doing that, the expectation from analysts and Wall Street is that, they have to keep hitting these numbers. And at some point, they're going to miss. And I think we're seeing that early in Q1 now with some of these. We're seeing them miss these high expectations. And mostly what will happen is analysts will then reverse them or bring them down into more considerable ranges. And then we'll start to see maybe mid to late year them start to meet expectations most likely. But we are seeing a lot of those tech stocks take heavy hits to start 2022.